Hello everyone, today we will be presenting Bene Studios growth strategies in order to show you how to unlock success in medtech. This is our team and we will be more than happy to present to you today. This is an overview of the dynamic medtech industry, highlighting its growth, challenges, and future outlook. This bar chart shows the percentage of the market share for the different subcategories in medtech industry. And after making some research, we can say the future looks promising with big bets on cardiovascular health, digital healthcare, and robotics, thanks to our agile and tech-savvy approach to R&D. We can find opportunities for startups in these sectors: the fast paced environment, biotech advancement, the medical training, AI in healthcare, but also in machine learning impact.
A quick overview of the three approaches that we follow. The first one is the logical one. We just scrape the surface with some data and some descriptive statistics. The second one, the research. We look at the internet and we try to understand the real-time data and some patterns from it. The third one, we build a machine learning model to get a more systematical approach on how to establish whether a startup will be successful or not. In logical analysis, we look at the most common industry among startup and found that the success rate vary depending on the fields. For example, biotechnology, which is the second one, standing out as the top performers with a success rate of more than 80%, while information technology falling below 60%. Another important factors we found was founded date. This graph shows distribution of founded date for successful and unsuccessful startups. Between year of 2010 and 2016, there was a huge increase in the number of startups that didn't make it. This could be because of tough challenges or market conditions during those years, leading to more failures.
Continuing with the logical approach, we wonder a question: why some startups in the medtech field failed? There is one thing that most of the startups have that went under at the last stage have in common is fraud. They all want to make money faster and then they skip a lot of process regarding the FDA approval and some stuff. The other assumptions we made is that technologies that they have, they might be really good, but they don't have a clear clinical need. Also, they have difficulties to translate innovative prototypes into commercially viable products. They also struggle a lot to understand the unique challenge of the industry. And lastly, young startups underestimate the time and the cost of each of them, which is quite problematic. To go deeper, we've conducted two interviews. The first one with Tracy, that is the director of community at Asimov, that is a successful company in the medtech, and also Mustafa Aladami, which is a CEO at Aztec Diagnostic, that is an unsuccessful company. We've asked them one question: what was the difference between an investor that would tell you, yes, I want to invest in your company, and other one that would say, no, I'm sorry, I don't want to invest in yours? They both had the same answer. The investor that want to invest, they clearly see a potential. They clearly see an opportunity to transform something in the industry. However, when they got the no of the investors, it was because they didn't see something exciting about, or they see too many risks. That was something not enough stable. That was very insightful for us to understand why some startups fail and why some achieve Series B, Series C, and so on.
Let's look into the research approach. We established the key KPIs to determine a startup success. A startup success rate is mainly based on valuation, so how much the startup is currently worth. This obviously is highly impacted by the funding amount. And having a closer look at the funding amount, we're particularly interested in the different amounts of funding for the different rounds. If the last funding is significantly higher than previous funding, it means that investors have confidence in the startup. They're willing to put more and more money into the startup by how long the startup exists. Also, the number of employees, it's highly important and highly influences the startup success because payroll costs are the highest cost of a startup, so we try to keep them low. Higher valuation also means the opportunity to recruit better talents because you have more money to spend on them. In total, the future growth is therefore defined by the valuation it has allowed startups to invest in new product services, market expansions, and ultimately increase the value. Then we also have a look at the founding date. It's highly important because most startups fail within the first 2 years, and the possibility of failure decreases significantly if you go past the third year. So, as an investor, if you want to reduce risk, you can have a look at startups that have already existed for more than 2 years or even more than 3 years. We conducted additional research to get key data for characteristics of the founder, the team, and the market.
Last but not least, the computer approach. With this approach, we built a machine learning model to have a more systematical approach on predicting whether a startup will be successful or not. To test our model, which with our training data had more than 90% of accuracy, we took some real data about real company. AudioFocus is a startup that failed a couple of years ago, and let's see how our model predict this. AudioFocus, as you can read here, works in the therapeutic industry, and these are their main features. Let's say what our model says about it. Exactly 0.01% probability of success. For a further investigation, we took the data for InsomaVio. InsomaVio is a startup that is currently working and raising money. Now the total funding that they raised is 2 million, so it hasn't reached the 3 million threshold. And let's see what our model says about it. It gives a 92.47% probability of success, which is just a positive outcome of the startups in the future.
After the analysis of the three different approaches, the best one is going to be the computer one. In the end, the takeaway that we want the Bene Studio should have from our presentation are the following one. First, to understand the industry and the tools that the startups are going to use, for example, AI and machine learning, if they are able to satisfy the market needs. The model show us how the Crunchbase rank the year of foundation, last funding, and the number of round of funding are high reliable to determine the business success. The same as regarding the experience of the team member. Not only the experience, but they must have the same shared vision of the future company. Thank you for listening us. I hope you enjoy our presentation.